Rick Santelli is standing by at the CME. Rick, take it away.
Yes, Becky, these are wholesale inflation numbers in the form of the producer price index for the month of May, up 0.1% on headline. That is very much 1/10 less than expectations. But do remember, in the rearview mirror, we had the trifecta of negative numbers. We had minus 0.5% last month. That was a very big number, the worst since COVID, or I should say the biggest drop. It isn't necessarily bad to see inflation going away. If you strip out the all-important food and energy, it remains up 1/10. As I said before, these are much cooler numbers. We're expecting up 0.3. Now, this follows a big down number, as I said, down 0.4 on ex-food and energy. That was the biggest going back to February of 15. It equaled down 0.4. We've never had a bigger number. But then again, this series was modified. It only goes back to 2010. Let's take out food, energy, and trade. Once again, it's up 1/10. And once again, that's a couple tenths lighter than expectations. Last month's minus 1/10 was indeed one of those big numbers. The only other negative number we had was COVID-related, down 0.4. Now, if we look at the year-over-year numbers, and these are important, this is where the stickiness comes in. Year-over-year headline, up 2.6. As expected, but 0.2 warmer than the rearview mirror. 2.4 was in the rearview mirror. 3.4 was March. That's what we're comping to. Take out food and energy, 3%, 1/10 less than expectations, 1/10 less than last month, which was 3.1. Where does it comp to? Comps to August of last year when we were at 2.8. So in a way, been there, done that. That's the stickiness I talked about. And finally, if we look at ex-food, energy, and trade, that's 2.7. 0.3 less than we were expecting, and some progress here. 2.9 was our last look. 2.7 would equal Jan of 24 to find a lower number. You're back to Thanksgiving of 23. Now, let's look at initial and continuing claims. 248,000 on initial claims as we inch ever closer to 250,000. That follows a slightly revised 247, which becomes 248, unchanged on the week. And to put a face on this, you have to go back to October of last year to find a higher number, and we all know what that was. October of last year, you're talking about 250,000. We finally traded above that, and on continuing claims, 1,956,000, getting ever closer to 2 million. Now, this remains the third consecutive week above 1.9 million, and these are the highest numbers since Nov of 21. Interest rates really aren't changed much, but they were already well down due to some of the weakness we're seeing in equities that may have to do with that crash, that unfortunate crash. And the pre-opening equities, well, they're in the red, and they have been in the red. A very subtle amount of improvement on this data. Becky, Joe, back to you.